Well, hello, everybody, and welcome. We're so glad you're here today. I'm Kelly DeMarco, and we really want to welcome you to our Investments and Megatrends webinar brought to you by Golden Stone Wealth Management. Today's topic is the 2021 forecast, markets and the economy post-COVID-19. Really great speakers today, and really we're here to bring you some valuable information, not just about what's happening in the marketplace, but also talk a little bit about what's trending, how best to invest your money in COVID-19, and also kind of get a little sneak peek, a little behind the curtain, if you will, of what it's like for a doctor right now. I know for me personally, I've been really curious about what's going on in the healthcare system and how they're managing getting through this crisis. So it'll be a fun ride here for the next hour. And again, thank you so much for joining us for our webinar today. As I mentioned, my name is Kelly DeMarco. I'm president of Kelly DeMarco Communications here in Sacramento. It's a media relations agency I formed after leaving television news for about 20 years. And so what I'm doing now is continuing to use my voice to help people like yourself learn a little bit more about what's happening in our world. I've been sharing stories of different businesses and nonprofits, and I'm really interested in this whole sector of finance and investing. And so hopefully you and I can both learn together here today. A couple little housekeeping items. You probably noticed you're on mute, and that's only because I'm going to be asking the gentlemen some questions today, and we just want to keep that quiet. But absolutely, we want to hear your questions. So feel free to use the chat box. Anything comes up, we'll get to some of those questions at the end, and we'll also give you some contact information to get a hold of either one of us, all three of us, if you have any questions related to what we're talking about today. But really, most importantly, this webinar is about you, and we want to thank the California Lawyers Association for being a part of this, because we really appreciate what you do for us, and so we want to give this valuable information to you. So obviously, when we look back over 2020, there's a lot that went wrong, right? How are you feeling now that it's a new year? I know for me, it's been tough in quarantine. I laugh at this slide because, a lot of people say, yeah, quarantine's been pure hell, not Purell, but pure hell. A little Corona extra, maybe. I like the guy on the right who's just like, honestly, I'm just happy to get out of the house. It's just been a crazy ride. And as we go into 2021, obviously a lot is the same, but much is different. And we'll learn about that in just a minute. So before we get into things that we're looking forward to, obviously with 2020, we had the medical crisis. Just recently, I looked up the latest numbers. There have now been 91 million reported COVID-19 cases since the very first case was reported in December of 2019, and more than 1.9 million deaths. So this is in serious territory here, which is why we're bringing on our doctor and CEO today. We've dealt with the economic crisis, right? Loss of jobs, livelihoods. I know here in Sacramento and really all over our state, with the governor kind of turning on and off that switch, right? A lot of businesses have had to go out altogether. Restaurants, salons, those businesses that really depend on customers coming through the door, they're having a tough time right now. We saw the disruption of the supply chain, which is, we couldn't find certain foods, even toilet paper at one point, and the financial crisis. I'm sure you feel that as well. The market crash that we saw in the spring, airlines, cruise lines, energy stocks, all under pressure, and commercial real estate, of course, really had an impact. And then, of course, the human crisis. If you're a parent like I am, you're certainly feeling the human crisis of having your child at home for distance learning here in California. I know my first grader's on 5 Zoom calls a day, so it certainly changed our way of life. And then we're about to inaugurate a new president, right? A week from today. And how is that going to affect everything? Not to mention our investments. So all of this stuff affects our money and the way that we do business. And I want to bring in our two fantastic panelists today that are really going to give us a glimpse of what to expect here in 2021. Our first panelist is Alan Schatzel. If we can see you there, Alan. Hi, Alan. Nice to see you.
Hi, Kelly.
Little background on Alan. He's the Chief Executive Officer for Mercy Medical Group in Sacramento. Dr. Schatzel is board certified in neurology, sleep medicine, and subspecialty in clinical neurophysiology. He's widely recognized for innovation, creative solution building, and healthcare service delivery optimization across the entire continuum of our healthcare system. And of course, he's leading the efforts right now in response to the greatest healthcare crisis and global pandemic of our lifetime. And then Sanjay Varshney is our second panelist today. Hi, Sanjay.
Hi, Kelly. How are you?
Great. Sanjay is the founder and principal at Golden Stone Wealth Management. Prior to founding Golden Stone, he was a senior wealth management executive for several years at Wells Fargo Private Bank, leading the investment strategy for over $200 billion in assets. He also served as the dean of the business school at Sacramento State, where he is still a professor of finance. And he also produces the local regional economic forecast, the Sacramento Business Review, which we just did yesterday. So thank you, gentlemen, for being with us today. Sanjay, let's start with you. A lot of questions regarding our investments in finance right now. How are the markets and the economy doing as we start this new year?
Good afternoon, everyone. And great question, Kelly. I thought I would set the stage by going back a little bit back into 2019 and 2020 as to how the economy looked pretty good when we first started out the year. We were enjoying a Goldilocks kind of an economy where, clearly everything looked great. Unemployment rate was down to 3.5%. And to a large extent, manufacturing looked great, service sector looked great. And, many people were asking the question, hey, when is the next recession? Andres, next slide, please. And just going back into 2020, the early part, we even had a China phase 1 deal signed, and that was very promising. And a lot of people were very excited about how 2019 was going to shape up. But then lo and behold, when 2020 basically, we went into spring, you could see, for example, with the COVID-19, situation unfolding in front of us, panic, started. And very soon we saw the market crash, and actually the market, was still hitting all-time highs in spite of the COVID news early on. But once I think it became pretty clear that the economic damage could be huge here, we saw a major crash both in the economy and in the markets. It took us 16 days very quickly to crash 38% in the stock market alone. Oil collapsed completely, and actually went negative briefly in its price, which is completely unheard of because we not only have a huge supply glut of oil in the market, we also have, the expectation that demand would completely dry up because of the national lockdown that we saw, for example, early on. Everybody was just panicking at that time because of the shelter-in-place mandates. We knew that things are going to be bad, and we were fearing the worst. Recession was going to be inevitable. We obviously saw unemployment claims quickly piling up as soon as they shut down the economy. And when I say they shut down the economy, I'm talking about a government mandated shutdown, which was pretty much a national kind of a mandate. And we were drawing parallels to the Great Depression at that time, because like I said, we were fearing the worst. We have not seen a pandemic in our lifetime. We had heard about the Spanish flu, from the previous century. We had heard about the economic damage and the medical damage, from that era. But, most of us had never lived through something like that. So I remember, Mike Pence was going around with that little signboard that said 15 days. And the expectation was that if we can just put our lives on hold for 15 days, we would basically be able to sort of flatten the curve, as they were calling it, and then life would come back to normal. But unfortunately, like I said, that 15-day period not only seemed like an eternity, but that 15-day actually got extended into several weeks. Schools did not reopen. Employers basically could not allow the employees to come back home. Come back to work from working from home. So you could see, for example, there was complete chaos at that time. And very soon, from an economic standpoint, the ones that basically got impacted immediately because of the fact that their business models were dependent on the customer interface for the customer to either come in directly into where they were, they were doing the business, or they relied very heavily on the consumer's presence for the business model, whether it was salons, barber shops, you're talking about, boutiques, and you could see unemployment claims piled up pretty quickly. 14.7% was the rate we hit pretty quickly. And just to put that into context, during the Great Depression era, we literally saw 25% unemployment. So we know that, when we hit 14.7%, that, the worst was still yet to come. And we were just predicting the worst. Further, as we continue to look at the whole situation unfold, I think Congress jumped in pretty quickly. So that was the good news. We saw the Federal Reserve jump in very quickly. We saw, for example, the Federal Reserve immediately taking down the interest rates down to 0%. While they had been in this raising mode for the longest time, because for the last 2 or 3 years before that, the Federal Reserve had been raising the interest rates. So very quickly, it went down to 0. Congress put a stimulus package on the table. Federal Reserve put a monetary stimulus package on the table. If you look at the combined stimulus that got approved within, I would say, 4 to 6 weeks, and just to once again remind ourselves, in 2008, 2009, Congress took 500 days to approve a stimulus package. But this round, it happened very quickly. And within 4 weeks, they put almost $9 trillion on the table. And then in subsequent months, another $2 trillion has been put on the table. So if I do the math, it's about $11 trillion, almost half the economy of the United States has been put on the table in terms of a stimulus package, which has really been helpful because without it, I think we would have been sinking into a depression. Obviously, we have avoided a depression. The good news is our economy bounced back pretty nicely, and we saw a spike back in economic growth. But in the process, we saw all kinds of households, businesses, hospitals, getting disrupted, seeking help. And we realized that all is not over yet because we're still talking about more stimulus, for the hospitals and more stimulus for the city governments and the state and the county budgets, because those are still disrupted because of the loss of tax revenue, for example, because of activity not happening. So we know that we are still waiting for, I think, more damage from the second surge that we are seeing right now. And so I think Congress is standing by, and I expect under the Biden administration that they will put more money on the table. Next slide, Andres. But in the process, I think we really have seen huge disruptions as to how we use the office space, how we live and work, telemedicine, online shopping, education, technology, tourism, air travel, restaurants, you name it. And we clearly now have a situation where the disruptions have created opportunities for some and destroyed others. So we have seen industries getting destroyed. We have seen businesses getting destroyed. But on the flip side, it has clearly created opportunity, like I said, and created a breed of winners that have managed to adapt to the COVID reality very quickly and taken advantage of it. And you can see they're thriving. So let me stop there, Kelly.
Yeah, it's really just incredible when we look back at just the past year, how much has gone on. And with just, everything that's happened. I want to bring in Dr. Schatzel at this point because, as Sanjay mentioned, Doctor, so many people have been displaced. Businesses have shut down. They're banking on the vaccines that are now available. Clearly, this is record breaking, and that vaccines have gone really relatively quickly from development to trials now to distribution, though it is going slowly. In the last several months, industries have been destroyed. I mean, I feel for these families who can't even be by their loved one's bedside when they succumb to this horrible, horrible disease. So tell us how you see the current situation with the vaccines and this surge in COVID post-holidays.
Yeah, thank you, Kelly. It's very dynamic. I can tell you it changes sometimes by the hour, but certainly daily we're having updates and reports on our hospital average daily census and our clinic volumes and what's happening across our health system. I can tell you that early on, March, April, we really didn't have a good idea what was happening. We were able to scale pretty quickly and get people taken care of, but we actually had to shut down for a little while and kind of figure things out. We've come through with the surge in April, May, we kind of peaked, and now we have this another surge. And I'm pleased to tell everyone that about 4 days ago is when we peaked in our hospitals, and we're now seeing this improving over the last couple days. I think probably most have heard that at least here in Sacramento region, the shelter in home has been lifted, and that's based on data, and what's happening in our hospitals, and our capacities are actually improving at this point. So it's been pretty remarkable to see the rapidity of the vaccine development, and I all have been seeing the challenges in getting vaccine out into our employees, our healthcare workers, and now trying to get into our patients. Some of that has been related to the way our systems are designed. We typically receive medicines directly from our contracted vendors. This is coming through federal government to the state government to the county level, and then being distributed through hospitals, which is a little bit inefficient and creating some challenges. But I can tell everyone confidently that we are quickly scaling. Starting tonight, we're starting to deploy vaccine to patients who are in high-risk categories above certain ages, 75 and above. And within weeks ahead, I think you're going to see concerted effort across health systems and mass vaccination clinics with our counties, where you're going to see exponential improvement in delivery of vaccine for our populations. Most of our healthcare employees and those who are in high-risk professions have been offered, and 90% or so have accepted vaccination. There are some people who have, for various reasons, not accepted vaccination. You've probably been hearing about those reports on the news as well. What I can tell you about the vaccines, and there's a slide here that kind of gives an overview, is, well, these have been very good, robust trials with high number of enrollment in these clinical trials. The mRNA vaccine is a fairly novel vaccine. However, it's been researched for over 10 years. These vaccines have been in development, so there's a lot of safety efficacy data even before these recent trials done by Moderna and Pfizer. And these mRNA vaccines are the current available vaccines that we are deploying for our populations. There's other vaccines in the pipeline, viral vector vaccines, and the protein-based vaccines, which are, flu and other vaccines that we're used to utilizing and hearing about. But I think there's a lot of hope and excitement and positivity right now, despite all what's the media has kind of been talking about, and some of it's doom and gloom. Inside of healthcare, there's a lot of positive energy right now. We're moving as quickly as we can, retooling our delivery system, and really stepping up to make sure our population is cared for and taken care of.
I know I speak on behalf of probably everyone listening, just to say thank you for all that our healthcare workers are doing in this unprecedented time. And like you said, just getting these vaccines out now on a quicker, more scalable fashion. I read something in the LA Times the other day that they're opening up Dodger Stadium, is that right, to start to get some of the vaccines out? So it looks like they're looking at different options to get, there's so many people in California. How long would it take to get everyone, millions of people vaccinated?
That's right. Yeah, Dodger Stadium, Cal Expo here in Sacramento, and the challenges is there's people who are connected to health systems and commercially insured, sponsored by their employers, and then there's others who are not, who may not have a physician, and those are what we're trying to solve for now, is how do we get vaccine to our population as quickly as we can.
Do you think it'll take the better part of the year, or what do you just kind of wild guess? I mean,
it's not necessarily a guess. Just looking at the numbers, we feel pretty confident that we'll be through the phased approach that's been kind of handed to us by the government by March, April timeframe, and then by that point, anyone who wants the vaccine should be able to come and get the vaccine. Once we've gotten through the high risk people who are high complexity and are those who have the most severe cases of COVID and end up succumbing to the disease. And I think April and March will be in the general population for those who are 16 and above for the Pfizer vaccine and 18 and above for the Moderna vaccine, the so-called young and healthy population. April, May timeframe should be able to get the vaccine out there. And hopefully by June, July, we're whatever new normal looks like in our country, in our state. Hopefully we're approaching new normal at that point.
Yeah, very hopeful. That's great to hear. Really quick, I know that we're hearing about some new strains. There was something in England that, shut down that country for 4 weeks. Should we be worried about new strains that are coming out here in the US?
Yes and no. I think new strains are not unusual. It's well known that viruses tend to evolve and change over time. Mostly, they're becoming less deadly, maybe more infectious, but less deadly because ultimately they want to be in a host that they can survive in. So what we understand currently is that both vaccines are believed to be effective in reducing severe cases of COVID, whether it's the new strain or the old strain. That's yet to be proven. There's a lot of research that needs to be done, but most of the things that I'm hearing are that the vaccines are thought to be effective with the new strains as well.
Yeah, I see that slide coming up because I do want to talk about the unknowns and even some of the side effects. I mean, the media's been kind of hyping this anaphylactic reaction. That's like a severe allergy. What's your assessment regarding those allergic reactions, and also this neurological syndrome, Bell's palsy? That's like that facial nerve paralysis has been reported in some patients with this vaccine. Are there really bad side effects? And I guess, I mean, at the end of the day, one thing doesn't outweigh the other, right?
Yeah, so let me start with Bell's palsy. I'm a neurologist. That's kind of in my wheelhouse. And so Bell's palsy is a condition we deal with in neurology. It affects about 20 to 30 people per 100,000 population. So we see about 40,000 cases of that in our nation every year. What we know right now is that the cases that have been reported within the clinical trials, and for those people who have received the vaccine, it's no more than what we typically see in a population. So right now, there's absolutely no direct relationship between the vaccine and Bell's palsy. So I think that's important for people to understand and recognize. As a CEO of a medical group practice, we have incredible, talented physicians. Just yesterday, we had a conversation with all of our clinicians and healthcare professionals about the adverse side effects of the vaccines. There has been a little bit of hype about the anaphylactic or the severe allergic reaction to the vaccines. Mm-hmm. The reality is it's about 1.1 per million doses. And this is a very low allergic reaction. There's many other medicines that have much higher incidence of severe allergy. And the good news is that we're prepared because we knew this from the clinical trials, that there were people that were having allergic reactions. And we're not only informing people through our consent process, but we're also prepared and monitoring after we give the vaccine. And severe allergic reactions are managed very effectively. Our allergist was one of our panelists yesterday, and they're doing allergy injections, and they have a peanut allergy clinic. So they're dealing with, weekly basis severe allergic reactions, and all of it is very manageable. And by far, contracting coronavirus and going through severe illness and potential death from coronavirus is worse than the side effects that have been reported at this point.
Great information, Dr. Schatzel. Thank you so much. So with all of that, I want to bring Sanjay back in because, when we're looking at just like the overall picture and trends, the way that we invest, the way that we're not even spending right now, there's so much that goes into this, right, with COVID. Sanjay, when you take this kind of information, how do you help clients with this just kind of almost unknown, this world that we have never seen before?
So Kelly, going back to spring of last year, where we really thought the world is going to come to an end. Because the way, we were panicking, both because of the medical crisis, and then we were not able to assess the economic damage that was basically just exploding all around us. So, sometimes you really have to be very unemotional about the markets and the economy because being humans, we could very easily be driven by our emotions to make the wrong decision sometimes. So just looking back at how the whole, situation evolved, eventually, we actually had a great second half of the year in 2020. And markets actually closed on record highs for the year. And just to remind ourselves, in 2019 itself, markets were basically hitting new highs. So in 2019, the S&P 500 was up 27%. NASDAQ was up more like 35%. And with what happened with the COVID in 2020, most people were not predicting that the markets are going to basically keep climbing and then end the year on a very high note. But then I guess, like I said, if you're unemotional and you start basically assessing all the basic, ingredients and support that were put on the table because of COVID-19, including the $11 trillion I talked about from Congress and from the Federal Reserve, the rates being brought down to zero. All of that stuff really helped. And while the economy sank about 5% in Q1 last year, and in Q2, it sank another 32%. Just go back, Andres, to the same slide. So you could see, for example, that people were worried that with a 32% decline, are we really now going to keep sinking into a depression here? But Q3, we spiked back 34%. I mean, you can see, for example, it was a great Q3, and in Q4, the numbers are not out yet. But I think we'll probably close out the year for 2020, maybe with a 5% increase in the GDP. Stock market closed out on record highs. I mean, we saw, for example, NASDAQ was up 44% last year. I mean, 44% is a staggering number.
Yeah.
P500 was up 16%. I mean, these are numbers that usually you see in extremely great years. And with whatever happened with all the negative stuff with COVID-19, hardly could people have predicted that, that we're going to see these kind of numbers at the end of the year. We have to remind ourselves, for the 30% that got disrupted really badly in the markets and in the economy, the 70% is still okay. So 70% of our economy is back to pre-COVID levels, and unemployment has come down from the 14.7% to more like 6.7% right now. And my expectation is that we're going to close out 2021, maybe closer to 6% unemployment. Clearly, we have lost people in the labor force. They have fallen out, on a permanent basis in many cases. And then there's a prediction by the Federal Reserve that we'll probably go back to 3.54% by 2022, because like I said, the growth ingredients are extremely strong, and we're going to see that play out in 2021. And we are clearly seeing the economy reshape itself with winners and losers. And there's a huge adaptation that's going on by businesses to the new reality. And I think that's going to be helpful going forward, because in my opinion, what could have happened over the next 10 years with technology changing the way we do business was compressed and accelerated in a few months. And while clearly, like I said, there has been disruption and there have been losers because of that, but there have also been a lot of winners because of that. So, what else can we expect going forward? For 2021, we will continue to see unemployment go down. So we will see the economy improve, continue to see retail sales explode. So as much as we might think that COVID-19 might have disrupted the consumer and how much we spend on goods and services, while we clearly saw negative numbers for services, we actually bought more goods in 2020. I mean, when Kelly, you were talking about people hoarding snacks and toilet paper, and a lot of stuff from the grocery stores, we actually saw consumption go up and overall by 3%. And retail sales online went up almost 35% this past year during the holiday season. So we're going to continue seeing that because, like I said, we are now getting used to a new way of doing business. Consumer confidence has come back pretty quickly. The reason why we care is because 70% of the US economy is the consumer, unlike many other countries in the world, which are much more manufacturing driven, or they might be much more driven by some other parts of the economy. Sometimes even the government has a much larger role to play in many economies. But in our economy, the consumer is the king and queen. And if the consumer feels good and they're able to spend the money, the economy does well. And we were all praying and hoping that the consumer basically does not completely withdraw from spending money, because if that happens, especially given the fact that, with the restaurants being closed, and to a large extent, and all the retail, sort of shops being closed. The question is, even the ones that have the buying power, they still have the earning power. They still have good jobs because to a large extent, large companies and mid-sized companies allowed the employees to work from home, and they were not disrupted, in ways where the small companies were disrupted or the small businesses were disrupted. So the consumer confidence has come back. And my expectation is that since the consumer was not able to go out and spend a lot of money on travel and leisure last year, they will spend a lot of money in 2021. They are going to go out and spend like crazy because the math shows roughly $1.3 trillion is sitting on the sidelines right now, waiting to go back into the economy because of all the savings from the households that people could not spend that they normally would spend on travel, leisure, hospitality, and other things. So the US GDP is going to bounce back. And while we were used to a very sluggish growth all these years in the last decade, where the US economy was lucky to grow at 2%, 3%, we're going to probably see growth closer to 5% in 2021, which is a spectacular number because that brings us closer to the 6% growth that China basically enjoys. And we know that China is an emerging, market, and they have a much higher growth compared to the United States. So that should help the picture quite a bit. And manufacturing has already returned. If you look at the Purchasing Managers Index, which is the barometer for us to see whether or not the activity in the manufacturing is healthy or not healthy, we were back above 50 and have been back above 50 for a while. So I think we feel pretty good about 2021 as far as the economy is concerned. Along the same lines, Andres, next slide. As I was pointing out about the winners versus losers, there are clearly companies, industries that got disrupted and they have been losers.
Yeah.
Either because the business model was affected directly by COVID-19, or they were already bad business models to begin with, and their demise was expedited by COVID-19. So when you talk about a JCPenney's, for example, and a Kohl's, they were already under pressure well before COVID-19 began. And now you can see, for example, they're struggling even more because these companies were not able to adapt to the new realities and be able to basically do business in a new way. So we obviously saw cruise lines, we saw banks, we saw airlines, and many other parts of the economy, get hammered by COVID-19, both directly and indirectly. But like I said, there were these zombie companies even before COVID-19, and they were not quick enough, they were not agile enough, and they were not able to adapt. So going forward, we will continue to see the same situation evolve. There'll be winners and losers. If you're asking, who are the winners? Technology was a huge winner last year. I mean, if you look at NASDAQ, for example, NASDAQ, which is pretty much has a lot of these technology companies, sort of listed on that market. They were up 44%, and in many cases, triple digits. In some cases, quadruple digits. I mean, you look at Tesla, for example, how quickly it went from nowhere to somewhere and actually eventually got added to the S&P 500. So if you look at this list, for example, there are no surprises. These are companies that have very aggressive growth models for business models. They are very tech driven. So anybody who had a good business revenue coming in from the cloud or sources on the cloud, cybersecurity, transportation. So FedEx, for example, is on this list. You look at chip companies, you look at online retail. So Etsy, Amazon, these are companies that have clearly benefited from all the online shopping that consumers have basically shifted to because they could not go into the traditional retail shops. You look at companies, for example, like PayPal and Square, which are companies in the fintech space that allow people to do all kinds of financial transactions, where, for example, the traditional banks were not fast enough to fill the niche. So I think going forward, you're going to continue seeing that. You're going to continue seeing, winners and losers. And then, Kelly, I think I wanted to point out to ourselves that there's a lot of stuff going on in the background that if you're not paying attention to, you might miss, the picture. Right now the news has been consumed by the politics and the elections and the contested nature of the elections and social justice issues and the protests, that are going on all over the country. And we forget that there are some mega trends going on in the background that have a huge impact on our lives, that have a huge impact on pricing and the way the markets evolve and the way the stock market does and the way the economy does. So I'm going to go through some of these things that are going on in the background, which clearly will reshape our lives even more. And I'm sure all of us will agree that things have already evolved very fast in these last several months. We are not doing business as usual. You know how, for example, Kelly, your daughter learns now from school teachers is very different from what was used to in the classroom. How we do telemedicine and communicate with our doctors, how we do our shopping, how we do our leisure activities, how we view movies now. So for example, you can see it's no longer, okay to be able to go to the movie theaters. And so Warner Brothers is now, forgetting about the movie theaters, and they are trying to distribute things directly into people's living rooms and family rooms. Technological breakthroughs are happening at breakneck speeds, faster than I can even imagine. It would be hard for me to predict what technology is going to look like 5 years from now. So robotics, cybersecurity, fintech, demographics and social change with genomics, aging process, that we have a planet that's aging right now. Rapid urbanization. I mean, we have clearly seen, for example, infrastructure, mega cities, smart cities. In this COVID crisis, believe it or not, Sacramento has been a winner against the Bay Area because of the mass exodus of people who left the Bay Area to move to more affordable housing, for example. And Sacramento has seen that, where masses of people have moved here and they bought homes. And we get this false sense of security that our housing market will continue forever like that, which is not true, because right now we are seeing that big benefit come in because of the nature of the work from home. Climate change and resource scarcity. So clean energy, electric vehicles, self-driving vehicles. There's a reason why Tesla stock has done well. There's a reason why companies like NIO, for example, have shown up on the radar for investors. Emerging global wealth. If I drew a circle just around China and India, Kelly, half of the population of the entire planet lives within that circle. And 30% to 40% of that population is what we call middle class in those countries, which is several hundred million more than the 300 million plus population of the United States. So if you're asking the question, why are we so concerned about China? Why are we so concerned about China, becoming stronger in its economy and stronger in its military? Is because it's actually scary, because like I said, they are the next frontier. And you can see the buying power coming out from that India and China circle, which is extremely strong. And there's a reason why even the American companies are playing along to a large extent and giving in to some of the stuff that China wants, even though many of us would challenge and question and say, well, why are we always doing that, right? So things are changing, as I said, right? Along the same lines, Andres, if you can move. So if we look at the markets, what happened in March with the market coming off 38%? It was clearly a buying opportunity. While a lot of people who are not very familiar with the stock market or with the way the economy works might have become scared and panicked and might have even sold some of their investments at that time or all of the investments. But history has shown that history repeats itself. And therefore, you gotta watch out for these dips, which exceed 20%, 25%, 30%. The last time we saw the dip was in 2008, 2009, when the market came off 55% over a 2-year period. But then since then, I mean, once you get past, let's say, March 9, 2009, which was a low point, by 2011, the stock market had already gone up 100%. And then the market went up another 300% since then, right? So you can see if you had panicked and did not return your investments back into the market, prior to 2011, you would have missed the ride. You would have missed the entire boat, right? Same thing happened this year, this past year. 38% decline in the stock in the S&P 500 and the Nasdaq. And since then, the market's already up 75%. And the market hasn't stopped. You can see even in 2021, the market's still on the rise. And our expectation is that we will still close out 2021 on a very positive note, on a double-digit note. So the market is expected to go up another double-digit this year. And that's where we are.
It's really incredible to just hear from you all these different, good things that have come out of COVID when, overall, it just seems so depressing and so low, but there's so many things that it's just good. It's a good reminder really for the businesses that are doing well that we should be investing in.
Absolutely. Next slide. So we are right now still in a growth phase. I think in a lot of ways, because we saw the sharpest recession on record, but it was the shortest recession on record in history. So we have really unleashed a new growth cycle now. It's a new bull cycle. It's a new bull market. It's a new expansion cycle in the economy. And I think going forward, growth is still going to be favored over value. And when I say growth, I'm talking about business models that can basically grow their revenues and earnings very quickly, adapt their business models quickly to the new ways of doing business, and technology, healthcare. We found a lot of these industrials are going to benefit because of the spending in the economy going forward. We're going to probably see financials do well also because with elections over now, we're probably going to see the more stimulus being put on the table, and the Biden administration is going to favor probably the financials in ways that were not possible before. So we are optimistic on those sectors in the markets. We'll see more consolidation amongst companies. We'll see more mergers and acquisitions. We'll see more stock buybacks. We right now still see a lot of cash on the sidelines that's going to keep chasing investments as we go forward. Tech now is more than 25% of the S&P 500. So we still like technology very much because, like I said, the future is still very high tech. There are fewer publicly traded stocks today compared to what used to be the case 10 years ago. So there's a lot more cash chasing fewer companies, which is keeping the stock market buoyant and high and at very elevated prices. And then we have seen business formation really spike this past year. Believe it or not, while a lot of businesses went out of business this past year, a lot of new businesses got formed also because of the new opportunity from COVID-19. And COVID-19 clearly has destroyed businesses, but it has also helped create new businesses. So let me stop there, Kelly.
You mentioned Biden. Here we are, we're a week away from his inauguration. And I think there's always a little bit of just kind of nervousness, when a new president is, comes into the picture. What are your thoughts on that and how that will play into investments and the stock market?
So, before election date, there was a lot of rumors and speculation that if Biden gets in, the stock market is going to tank 10%, 20%. And obviously, if you go back and take a look at history, and you really have to understand markets, you have to understand the politics and how it's played out over the last century. You'd be surprised that the markets really don't care as much as people somehow speculated that a Biden victory is going to be the demise of the stock market. History has shown that markets care about certainty. And if there's no major uncertainty, markets could care less if Democrats are in charge or the Republicans are in charge. And you can see, for example, going back to even 1925, 1926, the market has just moved ahead regardless of who was in office. However, it does matter whether it's a divided government or it's a clean sweep, and you see, for example, the same party controlling, the presidency, the Senate, and the House. But even there the analysis shows that divided government actually is good for markets because there's a check and balance system. People like the fact that no single party can just run away in an extreme direction with policy that could hurt the economy or it could hurt the markets. But again, history has shown that markets do well regardless. Like I said, if you look at the right side of this chart, if it's a divided government, if you look at the next 1 year or 3 years in the markets were comparable, the same pretty much. The 1 year performance does not look much different from the 3 year performance. However, same party, believe it or not, actually has been helpful for the market in the short run, because the expectation is that a strong agenda is going to get approved in the very first year, which is going to be helpful for the economy in ways that we may not understand. So 1 year performance looks stronger compared to the 3 year. And right now, the expectation is that given that it has been a clean sweep by the Democrats, that we will see a strong agenda coming out from the Democratic Party that's going to be helpful to the economy, especially with the infrastructure package, that we've been speculating about. And there'll be a lot more stimulus probably being put on the table. So we are optimistic that I think even with a clean sweep, I think you are going to see the markets and the economy benefit, from all the stimulus and all the spending that's going to take place in the next 1 year. Now, this was not what we were thinking earlier. I mean, like I said, a lot of people who are not very familiar with the numbers and how the markets evolve were probably thinking that, hey, with higher taxes, with more regulation under Biden, with maybe the foreign trade policy not being that favorable towards American jobs, we'll probably see the markets take a hit. And in fact, the speculation was as recent as last week that if the Georgia runoff was going to basically go in the favor of the Democrats, we would see the market tank 10%. That didn't happen. Again, because like I said, all these speculations come in because people have not really paid attention to history and how markets truly have reacted to the way the government has worked.
That's why we need you. Because you mentioned more than once, you're like, don't let your emotions get involved. It's hard. It's hard when you're in the middle of just uncertainty and unknown. We're talking about our hard-earned money. So it's helpful. I appreciate you looking back over time. That always sets me at ease to look at the trends and look at what has happened and how things have recovered. So knowing what we know after this crazy year, what are your just kind of final thoughts as we push ahead into 2021? Like, what does this all mean for us as business people, as business owners, investors?
So 2021, as you go forward, I think is going to be about being selective in the markets. So Andres, if you can forward the slides. We have to stay calm. We have to make sure that, we are not emotional as we go forward, with how we invest and where we invest. And believe it or not, investor behavior accounts for a big chunk of the returns that they see in the markets over time. And a lot of people I know, who are my friends, and even the ones, who I just know offhand, they tend to trade a lot. They tend to think that market timing is easy. Hindsight is always 20/20. They always think that I can get in at this point, I can get out at this point. But really speaking, history has shown that if you just adopt a more unemotional buy and hold strategy and don't trade that often, you'll find that you'll come out much farther ahead compared to when you are basically trading a lot more aggressively. You almost lose half your return if you're not basically invested for 10 to 15 days in the market. And history has shown that the ones who trade very often usually lag the market indices. So for example, on this chart, you can clearly see while the US markets have averaged about 9.5% over long horizons, inflation adjusted, the average investor has actually just performed at 8.2%. So they have lagged the market primarily because they've been trading too aggressively. They've been trading too often. So along the same lines, next slide, please, Andres. You got to make sure that you are doing it right. You understand the markets well. And sometimes, like I said, it's just easier if you seek help. I mean, I know a lot of people invested in the stock market and the bond markets seem to be trying to do it themselves because they probably think about, hey, I read the Wall Street Journal. How difficult can this be? I could probably do this myself. But sometimes, like I said, if you are emotional about your own investments and you're not able to basically be rational about the right approach, it's always easier just to seek help. And that's where people like us come in, because we active managers, we obviously tend to be very unemotional and make sure that people are doing the right thing about their investments.
Great information. Thank you so much. And, I'm just looking in the Q&A section here. I know that we just want to let people know that this whole thing is being recorded. So we'll be able to give you a link to this and give you copies of the slides. I want to bring in Dr. Schatzel again because there's a couple of questions that have come in from our chat room. In fact, I was looking down at my phone here a minute ago, a doctor that the Governor Newsom just said that they're going to start giving some scarce vaccines to folks 65 and older. So things are just changing by the minute, right?
Yeah, absolutely right. Yeah, daily. Yesterday is when CDC gave new guidance for 65 and older, and we're adapting very quickly. Right now, the clinics we have scheduled are 75 and older, but by Monday next week, we're going to be offering vaccine to everyone 65 and older as well.
Yeah. I have a question from our chat box here saying, do you anticipate more retailers filing for bankruptcy and liquidating rather than restructuring because of not being able to adjust their business model to already changing market conditions? What do you think, Sanjay?
Yes. We expect many more layoffs in 2021. We expect more bankruptcies, primarily because, like I said, there were winners and losers. And many of these companies that were not able to adapt very quickly will basically find it easier to restructure under Chapter 11 because the bankruptcy code. So remember, there's a difference between liquidation, which is Chapter 7, and Chapter 11, which is reorganization and restructuring under bankruptcy. It's much easier to file for Chapter 11 because that gives you a lot more breathing room to basically reorganize your business model. So I do expect to see a lot more of that in 2021. And while some companies like Amazon will hire many more people, there'll be other companies that will start laying off a lot of people because they simply cannot afford to have so many employees on the payroll.
Doctor, question for you, just as I was, thinking about, things that are changing. I just want to ask you just a personal question, and just how are you doing? How are nurses doing? I just can't imagine just this constant, seems like 24/7 cycle that you have been in since, gosh, we're nearing a year now. How's everyone doing?
I think surprisingly well, actually. So healthcare is a calling. People that get drawn to medicine and nursing and taking care of patients. There's a reason why we got into it, and I think that in some ways this has caused a lot of people to reflect on why they got into healthcare and reminded them how important the work that we do is on a daily basis and how rewarding it is to take care of people and to educate people and to change people's lives and save people's lives.
I know, obviously, as a CEO, obviously you've got the doctor hat, you've got the CEO hat. I'm sure you've got some investments. Do any thoughts about just some of the topics that Sanjay talked about when it comes to just kind of the outcome from COVID on a financial side?
It's impossible for me to keep track of the markets and do well in markets. And, when somebody needs professional advice from me, they really should be coming to me. I think, I'm someone who should be working with Sanjay and trying to make sure that I'm, not dabbling in the markets, but really have professional help to move my portfolio along.
Yeah. Well, great discussion, you guys. I think, what I've taken out of this is, number one, that our future is optimistic. I think it really set me at ease in the beginning of this, Doctor, when you mentioned that, really the vaccines, just getting people inoculated and having our kind of normalcy way of life coming back. Really, I feel like there's a light at the end of the tunnel, both on the medical side of our conversation and also on the financial side of our conversation. It sounds like, Sanjay, it's not too late to invest. In fact, it's still a good opportunity for those of us who have, extra income that we haven't been spending on leisure. Would be a smart decision to invest. And also, I think the things that just bubbled up were how strong technology is. Here we are having this conversation on Zoom with, how many people, all the technology aspects have really changed our way of life, and it's not too late to jump into that. And also just thinking, just after this conversation, as we think as investors, to think about some of the new industries that have come out of COVID, and just, start thinking about what's next. What's the next thing to invest in? What's the next thing to kind of put your money behind? And it's just a great opportunity to just open that conversation. We've all been, I think, running 24/7, just trying to, stay afloat, do our business. I know that takes a lot of time, but it's also really helpful to just take a pause and hear from you guys about really what's going on in the world. And there's a lot of options, it sounds like, Sanjay, for, just kind of making the most of our money right now at any stage.
Yeah, absolutely, Kelly. One thing I would want to point out is that given how markets have been very elevated, in 2019, the markets hit new records. 2020, we hit new records. 2021, we are still expecting markets to hit another new records, right, for all-time highs. A lot of people are concerned about bubbles. Hey, are we basically now behaving like in the late 1990s?
Mm-hmm.
And everybody was just celebrating, the good times in certain companies, especially technology companies, and then all hell broke loose in 2001, 2002, 2003 when the market crashed. Some of these tech companies like Intel, Cisco have not recovered to where they used to be in the year 2000. Imagine 20 years later, the stock price still hasn't gone back to where they used to be. So there is some concern, that are we basically getting too euphoric here about the Zoom stocks of the world, or the DocuSign kind of stocks of the world. So I think it's important to put things into perspective. There will be winners and losers, and there are companies that are able to scale the opportunity in their favor very quickly, just like Amazon has done for the last 20 years. I mean, Amazon. Nobody would have believed Amazon in 1999 or 2000 where they would be in the year 2020 or 2021. So there are companies that can scale those things very quickly. And if that happens, you can justify those prices. You can justify the valuations. For some others, they're highly questionable, whether or not you can justify those valuations. So that's why I keep reminding ourselves, 2021 is not going to be the year of the beta, whether you can just rely on throwing darts at the market and just putting your money into any portfolio and you'll do well because the market did well. You'll have to be more selective. You'll have to be selective about the industries you're invested in. You'll have to be selective about the kind of style, large cap, mid cap, small cap, emerging markets, because we'll probably see a rotation, and that rotation is already happening where small cap, mid caps are being favored a lot more this year compared to last year. Emerging markets are going to be favored a lot more in the next 12 months compared to the last 12 months, because we see a lot more growth returning to China and Brazil and India and some of these countries that we do not have in the United States. So you have to be very selective.
Real quick question from Kip in our chat room. He asked about the Fed printing some extra money and how that's going to impact our economy.
In the short run, it's clearly a bullish thing to do because, we are saving ourselves from all the major economic damage from the COVID-19. And this is going to help basically stay afloat and climb into something better. In the long run, the day of reckoning is still there somewhere out there on the horizon, where all this extra money that we have put on the table, somebody has to pay off that debt. I don't know who's going to do it, which generation is going to do it, but clearly we cannot go on forever being fiscally irresponsible and monetarily irresponsible, where we keep putting more public debt on the table and think that it's not going to go away.
Dr. Schatzel, before we go, and I see a couple questions popping up in here, is, it has been fairly political as far as wearing a mask or not. COVID protections, are they obviously, as you know, are vital. What would you tell people or tell us to just continue on with to keep us safe before we get vaccinated? Any last minute advice?
Yeah, on the slide, there's a lot of unknowns about the vaccine. And one of the unknowns is, does it prevent spread of the virus? And we don't know that for sure right now. It definitely reduces your response to the virus, and much more likely you're going to have an adverse outcome from getting infected. So the recommendations now are wear a mask, wash your hands, and stay socially distant. Those are key public health things to reduce the spread of this virus while we're getting everyone vaccinated and just trying to take care of everyone.
Great. Well, I know we couldn't get to all of your questions today, but again, you can get more information on the website. Golden Stone Wealth Management is going to put up a copy of this as well as some of the links. And on behalf of Dr. Schatzel and Sanjay, we just want to thank you for your time and your interest today, and happy investing. Stay safe. And Dr. Schatzel, thank you again for all you do for our state and beyond. We really appreciate the work that you do. You too, Sanjay. Thank you so much.
Thank you.
All right. Take care, everybody.